Hi there, guys. I can see that Charlie, Richard and Rose are online. Can you all hear me? Do you want to just put something into the chat to say hi? That's great. Thanks, Richard. Hi, Charlie. Wonderful, Rose. Thank you. Hi, Vanessa. Great to see you all joining in. Thank you, guys, for coming along. We've got 24 people signed in, so we'll just wait a little bit until they've all turned up. And in the meantime, I'm going to pop a poll up just to get a bit of information about what you guys are already doing with budgeting, just so I can see how we can help you the best today. I hope you've all got a cup of tea ready. We might need it today. So during this session, it's going to be about 45 minutes, and we'll have 5 minutes for 15 minutes or so for questions at the end. But if you've got anything that you want to ask whilst we're going through, just pop it up in the chat. And I will take a little stop every 5 minutes or so just to see what's in there, and hopefully we can get quite an interactive conversation going. We've got quite a lot of stuff that I want to cover, and the plan is that when you guys are all finished at 1 o'clock, you'll be able to go off and write your budget in about 45 minutes is the plan. So I can see so far we've got about half of you writing your budgets in Excel, which is great, and about a third don't have a budget at all, and that's absolutely fine too. The idea for today is that we can get into writing a budget really quite simply and easily, and if you've never done it before at all, that's absolutely fine. So for those of you who've just joined, I've asked if you can just pop a quick message into the chat to say that you can hear me fine, if you haven't already said hello. Hi there, Joe. Joe, you might see that there's a poll up. Oh, and hi Vicky too. I can see you just turned up. There's a poll up that you can just fill in while we're waiting for the other people to join. That's going to tell me how you're currently writing your budget. Oh, great. Thanks, Joe. So we're actually getting to about 50-50 with people that don't have a budget at all. I don't know, can you guys actually see the poll as it comes through, or is it only me that can see it? Okay, so we've got about half of you that don't have a budget at all, and approximately half who are in Excel. Oh yeah, hi Vanessa, yes, we're doing a recording. Just check that is recording. Yeah, it's recording, and I'll make the webinar available for anybody that wants to re-listen. We'll put it up somewhere that you can easily access it. And then if there's anybody that you know wanted to come along today but hasn't been able to make it, then we can just send them over a copy as well. Okay, so I've got one person who still hasn't put in their polling. Does anyone not have the poll showing up in their Zoom? Okay, great. So 5 past 12, I think what we'll probably do is get started. If anybody else is going to join us halfway through, then that's absolutely no problem at all. So I'm going to end that poll. It's really interesting, actually. I don't have any of you guys using Xero, QuickBooks or Sage for doing your budgeting. And I'm a little bit surprised about that, but actually I think there's a real hole in the advice that a lot of business owners are getting about how to do your budgeting and forecasting, and that's what I'm trying to do today. So thank you so much to Tracy and George for inviting me to be one of the training speakers in this series that they're doing. I think it's a really fantastic opportunity for us to share some of our specialist knowledge throughout the whole of Success Group, so that's fantastic. For those of you that don't know me, I'm Tori Wagg. I'm the Managing Director at Panthera Accounting. We're based in Didcot in South Oxfordshire, and we work with about 200 limited companies and about 300 sole trader accounts. Sorry, that was my phone going. And about 300 sole trader accounts, and we aim to bring management accounting skills into the practice of accounting. So lots of you might have an accountant who helps them do stuff at the end of the year, make sure that you're compliant, make sure that all of your tax is being done correctly. And what we like to add to that mix is the sort of skills that you often find in slightly larger companies, where we can help people to deal with financial information on a day-to-day basis. So how we can gather up the information that we're having to record anyway to comply with HMRC rules, and really use it to understand our businesses better and to drive them forward. So budgeting and forecasting is the thing I really want to focus on today. What we're going to do is have a little bit of time talking through that, and then we're going to actually write a budget in this 45-minute session. Lots of people think that budgeting is something that should take days and days of work. What I want to talk about is doing a quick and dirty budget. So just getting yourself into this whole idea of how to get started on budgeting so you're not scared by it. And I hear lots of business owners saying, this is the bit that I'm a bit frightened of. I'm worried I'm going to do it wrong. Well, the lovely thing about budgeting and forecasting is you can't really do it wrong. You can make something that's not massively accurate, but it's all about thinking about what could happen in the future and then modeling it out. So this is the creative, fun part of accounting. It's the stuff that I get really excited about helping people with. So let's get started. I'm going to just bring up on the screen some slides just to keep us on track. And if you've got any questions whilst we're going through, just ping them up in that chat box over on the side, and we can talk them through from there. So let me just bring up the slides that we want to see. Give me 2 seconds. And I will share this screen with you. So can you guys see my, hang on 2 seconds. Can you guys just see me, or can you see a slideshow at the moment? Fab, thank you. Let me just get that back over. And can you now see a slideshow? Okay, great, thanks. So we're going to get started on talking about the difference between budgets and forecasts. So what I want to just make it clear for you, because we often hear people talking about budgeting and forecasting at the same time, and I just want to just differentiate between the two. What we're going to be looking at today is a bit more on budgeting, but we will cover some stuff on forecasts as well. So what are budgets? Budgets are based on your profit and loss account. So that's the stuff about money that's coming into the business and money that's going back out of the business. So we sometimes talk about income and expenditure, or revenue and overheads. Those are the same things. I know accountants have this habit of using lots of complicated words to talk about the same stuff, but if we're thinking about what do we put a sales invoice out for and what do we receive a bill in for, that's what we're talking about on our P&L. When we're writing a budget, we tend to do this on a month-by-month basis, or that's the way that I like to write it. So we're going to be looking at normally starting from next month, or maybe a couple of months in advance, and then writing it out over the next year. A budget is really a plan, and for us in success groups, this is something that we're really used to thinking about, is planning where we're going and what it is that we're trying to achieve. So if you think of your budget just as a financial version of your goal setting for the year, we kind of write our budget in the same way. So sometimes we'll say, where do we want to get to by the end of the year, and then chop that up into the months and the quarters, and that's how we're going to write our budget. And sometimes we'll write it the other way, and we'll say, we know it's going to cost us this much money for our overheads for this month, and then we plan that out going forward. And as I said before, it's based on income and expenditure incurred, and the important word there is incurred. So we're talking about when do we send out our sales invoice and when do we receive our bills in, not about when money comes in and out of the business. And that's one of the key differences between budgets and forecasts. Budgets tend to be done on this P&L basis, which is about when we're going to bill people. And forecasts very often are involved in when is cash going to flow in and out of the business. And if you're doing something like starting up a new business and getting some loan capital, that wouldn't show up in your budget, but it would show up in your forecast, because it's not money that's come to you because you've sold something. It's money that you're borrowing and then giving back possibly. And so it's important that we see your budgets and your forecasts in two different lights, because they're telling you different things. Budgets are really about profitability, and forecasts are really about what's going to happen with your cash inflows and outflows. So under the forecast banner, you can have this thing called a three-way forecast. This might be something that you've heard people talking about before and thought, what on earth does a three-way forecast mean? Well, a three-way forecast has got three elements to it. It's got a profit and loss, it's got a balance sheet, and it's got a cash flow forecast. Traditionally, these used to be quite expensive to put together because there's a lot of data there. And you, in a large company, might have a team of management accountants who work on creating that kind of data. These days, even in a small business, it's possible to do these sorts of three-way forecasts really quite cheaply if you're getting your data together in the right way. And that might be if you're using some software like Xero, which is one of our favorite accounting softwares. If you're collecting your data in there, you can then extract it out to something like Spotlight, which is our reporting tool, and that will help you to create three-way forecasts really fast. Today, we're not going to do a three-way forecast. We're just going to talk a little bit more about the cash flow side of things. In a small business or a new business, the cash flow is absolutely essential. If you don't get your cash flow right, even if your business has the ability to be profitable, if the money isn't coming in at the right time, that's what tends to create issues for small businesses. And the majority of businesses that fail in their first 3 years, it's because their cash flow is wrong. So when we're talking about budgeting and forecasting, it's really useful to have those two things being done together, because it's great if your business is profitable, but if it's not going to have the right cash flows, we could have real problems. And if you've got enough cash coming in, for example, if you've got people investing in your business, but it's not making any profit, that business isn't going to be successful either. So we need to look at these two things together. Forecasting isn't about profitability, it's about money coming through the business. And really what we're thinking about is if it's something that's going to have an impact on your bank balance, then it's going to turn up in your forecast. So that might mean if you're going to borrow some money from the bank and they're going to lend you in 3 months' time, that would turn up in your forecast in 3 months' time as a cash inflow, and then you can see how that repayment's going to go out. If you're thinking about your budget, that wouldn't show up in your profit and loss account at all, apart from possibly the interest part on the borrowing, and therefore it wouldn't show up when we're writing our budget. So hopefully that's given you a bit of an idea about what those two differences are. Why do we need them? What's the point in doing this exercise? Well, they help us to plan our business. So if we've got a brand new business, it's really essential that we write that budget before we start getting going in our business, because it's a way of finding out, is this actually a plan that's going to work? It's really useful to check our assumptions. So some of us do this kind of budgeting process just in our heads. We kind of go, well, I'm going to sell this thing and I'm going to sell it at this price because that's what the market says it's worth, and I'll just buy it in for whatever it costs. Well, those assumptions that we're making are really important in our business plan, and we need to get those written down. So the budgeting process helps us to go through and say, well, what are we assuming here? Are we correct to think that we can buy this product in at this price? Are we right to think that our rent's only going to be £50 a month? And it gives us an opportunity to go through that process and really pressure test what it is that we're doing, just like we would with our goals when we're doing our goal setting for the year. When you're writing your budget, that's pressure testing for your finances. Gives us something to measure against. So once we've set our budget for the year, we can then every month look at what's actually happened in our business, see what was going to happen in our budget, and then we can see, are we on plan? Are we going in the right direction, or are we maybe slightly overspending in some place and we need to rein that back in? So it gives us something to measure what we're doing against. It helps us with decision making. So if we've got a budget in place already and we want to work out if we're going to maybe add a member of staff into our cost base, once we've got our budget written out, we can make those changes in the budget and see what the impact is going to be on the bottom line, and it can make that decision making process much easier. If you are starting a new business or you're going out for lending, you're probably going to need to provide a budget to the potential investors, potential lenders. And very often now I'm seeing the banks asking for a more professional sort of document. So it goes in as part of your business plan. And it should be a document that's working for you. So we write our budgets at the beginning of the year. Some people write another budget during the year to take into account any changes that have come up, and those documents should really be updated every year so that they're ready to provide to somebody for lending. If you suddenly find that you do have a cash flow gap from doing your forecasts, you'll be ready to go off to your lenders and say, here's my documentation, I already know what's going to happen in my business, or I've got a good idea of what's going to happen in my business. It helps us with our goal setting. So budgeting and forecasting in the business fits really nicely with the way we think about our year in success groups. So I often write my budget at the same time that I'm doing my goal setting process for BBB, because they're so interlinked. If I know what it is that I'm trying to achieve by the end of the year, I can write that into my budget and then work backwards to see how much I can afford to spend in different areas, or even work the other way and say, I know I need to spend this much on marketing. How much am I going to have to make this year in order to make that a profitable way to run my business? So where do we start? For some of you, for half of you in this webinar at the moment, I know, you've never written a budget before. And so that's a pretty terrifying thought, is where on earth do I start with this? Well, actually, it's not as scary as you might have thought. So first thing is, am I going to do this in a spreadsheet or am I going to use some software? Today, we're going to work on a spreadsheet. At the end of this session, I'm going to send you that spreadsheet template over. So don't worry that you need to be taking lots of notes or have an Excel sheet up and running and copying what I'm doing. Just listen for the moment. And at the end of the session, that template with all of its formulae in it that are going to help you with those workings will be yours. So you can just fill in the blanks. In the ideal world, I would love to see everybody using software for doing budgeting. In something like Xero, it may be that you prefer a different type of software. But the bonus from using some software is that then when you're coming to look at your reporting on a monthly basis, if you've been keeping your data in something like Xero, at the end of the month, it will instantly say, this is how you're doing against your budget. This is where you're up and this is where you're down. And that fast reaction that you can get back from using software means that you can be reporting much more often on your budget, and you can use your budget. You could do it every single day and see how you're doing on a month to date basis, and that's really powerful because it gives you a faster indication of if you're going off track. So software is ideal, but let's start with spreadsheets. With something like Xero, you can import an Excel sheet into Xero once you've written your budget. So we often do our budgeting in the spreadsheet and then pull it back over. You want to go out and research your market a little bit. So when you're writing your budget and you want to say, well, I want to sell this product at this price, before you do that, you're probably going to want to find out what other people are selling your same sort of product for, or you might want to go and see what the market will tolerate. You want to see what sort of things are available for you to buy in the market and your pricing. So before you start to write your budget, you want to go out and do that bit of research. You might have a business plan that you've already written. You want that by your side. So if you've already worked out in your business plan that you're going to talk to X number of customers each month, that sort of data is going to be really useful for informing how you do your budget. You're going to want to get your goals out. The lovely thing about talking to all of you guys is that I know you've already got your goals written, so you know where you're trying to get to, and that's a really big part of writing your budget. So we've already got that in place. We're going to start with that sitting by our side and use that to inform our budget. If you are a brand new business, you won't have any actual data to bring forward. If you've been trading for a year or more, it's very useful to have last year's actual data to work from for your budget, because if you're in any sort of seasonal business, you'll be able to then see what sort of movements you're going to get during the year. So for example, if you're selling Christmas tree decorations, you know that your costs are probably going to peak in, say, October when you're buying in, and your income's going to peak in December. And if we've got a couple of years of that kind of data to look at, we can bring that forward into our budget. Some people write their budgets just by saying, well, I spent this last year, so I'm going to spend the same plus 2% this year. Other people do it in a slightly different way and say, well, I'm not working on exactly the same model, so we'll look at something else. But it's really useful to have that actual data by your side. The other thing I can really recommend, if you're feeling a bit stuck when you're writing your budget, and lots of us who run our own businesses can get quite lonely around some of this financial stuff, buddy up with somebody else who's in a similar position in their business. So if you've got a service-based business, it's nice to do this with another service-based business. And if you're buying in products or manufacturing, it's really nice to then have somebody else in a similar situation, because they're quite different sorts of businesses. If you can do it in a similar age stage in your business as well. So if you're a startup business, find another startup business that you can do this with. And if you don't have somebody to buddy up with, give us a shout, because this is the bit that I love to do. I will very happily sit with you over a cup of tea, 45 minutes or so, and help you out with this process. And it will really help to ask some questions about some of the assumptions that you might make. So you may have thought, well, I can only sell this product for this much. But if you've got another person to bounce those ideas off and they say, well, have you thought about this pricing, or could you double up with this other product, then it will really help you to refine that budget. Okay, so we are going to play with something that I've called the BBB product company. So this is our little demo company. It's a make-believe company that's just started up. And what we're going to do is open up a spreadsheet. So I'm going to share that screen with you in a second. I'm going to share this Excel template at the end with you to play with. So let's get that sheet up. I will just pull it up over here for you. Can everybody see my Excel sheet? Great, okay, that's fantastic. So, what I have got for you here is a basic budget sheet starting from next month and going out for a whole year. That's my preferred model. Some people only budget for 6 months ahead. If you're in a very fast moving business where an industry is changing really quickly, you might feel that you can't go further than 6 months. But most people will start off with a good 12-month budget. Just starting from next month is fine. You don't have to do it in line with your financial year, so don't feel you've got to wait. If your financial year doesn't finish until December, don't say, okay, well, I'll come back to this in January 2019. Do it now, just do it for the rest of the financial year that you've got. That's absolutely fine. As you can see, I'm hoping this is nice and clear for everybody. I've gone dates across the top and then items down the side. This is a nice simple way of doing it. And this particular company is buying in and selling 3 products, and they are called Biggers, Brighters and Bolders, just with a little nod to George and Tracy. So we're going to be buying in these products and selling them out again, and what we need to decide is what price we're going to put those in at, and we're going to have got that from doing some market research. So I've left this completely blank, and what we're going to do in the next 15 minutes or so is complete this total budget. So I'm going to just start off with a few assumptions, which is that we're going to be selling 1 Bigger, 5 Brighters and 3 Bolders in June, and I'm going to set some prices up just for the moment. So we're going to say that the Biggers are being sold at £250, the Brighters at £500, and the Bolders at £750. And you could imagine, if you're in a service-based industry, that maybe these are 3 different packages that you're selling to your clients. And if you're selling items, if you've got products that you're selling, you can think of this as products. But I know quite a few of you are in some sort of service base, so think of those as your different packages. And these are your number of clients that are buying that package on a monthly basis. So what you might have noticed is, as I filled in the number and the price, the sales income, that's your turnover or your revenue. We use all of those 3 names for this. So your sales income is being automatically calculated from how many of them and at what price. And so on that basis, for our first month of trading, we're going to have £5,000 of income. What I've done down below is said, well, the cost of me buying in a Bigger is 10% of what I sell it for. So it cost me £25 to buy that thing, and I'm going to sell it out for £250. The Brighters are a lot more expensive, so they're 25%. So it's to buy in 5 of these Brighters, it's £625, but it'll make me £2.5 grand, so that's fine. And then the Bolders are the ones that I have the smallest margin on, so they cost me 50% of their sales price. And this sheet will then work out what my total cost of sales are. So cost of sales are the costs that go directly into the thing that we sell. So if it's a product, that's really simple. It's how much do I buy the product in for so I can sell it back out again. If you're in a service industry, it might be that you subcontract some work out to people, and that would go into your cost of sales. But for a lot of us in the service industry, our cost of sales aren't that high, and most of our costs come down as overheads. That's below your gross profit line. And you can see here's your gross profit line here. So your gross profit, that's the difference between your sales income and your cost of sales. So in this sheet, what we're going to do is say, okay, we're going to assume that we're going to keep our pricing the same, and maybe just for July and August, we'll keep exactly the same turnover. And then in September, we're going to sell double what we sold in August, because we're going to have done our marketing and people are going to start learning about our products. And actually what we're going to do is just assume that our pricing stays exactly the same. October, we've done the same, and November as well. And then in December, we have a little bit of a Christmas rush. So we sell a few more of these products. And then in January, we go back to where we were before. Now, some of you will be more familiar with Excel than others. I'm just using cut and paste to fill this in. But if you wanted to type in your data separately, that's absolutely fine as well. In March, we have a few other changes that are happening in the business. So we're bringing some more staffing in, and that creates an increase in the number of things that we sell. So what I've done there is I've just filled in over the year how much we're going to sell. We're going to keep our pricing exactly the same, and that's giving us a nice idea of what our turnover for the end of the year is going to be. On this basis, 153,000, and how much that's going to cost us to buy those products in. It's 56,000 there. So it's giving us a £97 gross profit for the year. Now, if we wanted to say, well, what happens if we increase our prices? Maybe in December, we pop those prices up here. And then we fed that across. So I'm just going to do copy and paste again. And then we can see what effect that has on our bottom line. And the nice thing about using a dynamic sheet like this is that you can change the simple numbers. So what happens if I sell more of this product? And it will all feed through down to the bottom line. So you don't have to go in and work out these calculations. You can just see what happens. And the same would go for if you wanted to say, well, what happens if I can find a manufacturer who can make this for me at just 20% of what I'm selling it for? What does that do to my bottom line? So this spreadsheet's got all of that built into it. And when I pass it over to you, all you'll need to do is just change, obviously, the name of your products, the things that you sell, maybe add some extra lines in if you've got some other ones, but the rest of this will just work through for you. One of the things I get asked very often is, what do these gross profit and gross profit margins mean? So gross profit is the difference between your income and your cost of sales. And then the gross profit margin is saying, well, this gross profit that we make as a percentage of our income, what is that? And what I've done here is made this an average over all of our different products. So it's averaging out at about 66% on the year, which would be a really nice position to be in. This is a figure that you often hear people talking about. The gross profit's it's an important figure in your business, because when you look at your turnover, that could be enormously high, and it may still not be telling you that your business is profitable because you're spending a lot to make that product ready for sale. So keeping an eye on your gross profit margin is really important. Right, let's come down into the overhead section of your budget. So what we've done so far is worked down to your gross profit. Now the overheads part, some of this you'll know the information for already, and some of it you're going to have to just take a punt on. So it may be, for example, that you don't have very much stationery, you need to buy some pens and something once in a while. So let's say it's going to be £10 a month, and that's fine. And we can just copy that straight across and pop it in. With something like printing, you might say, well, actually, I'm only going to do a run of business cards once this year, and I don't really need much other than maybe a bit of letterhead. So let's just say we're going to plan to do that in July, and we'll just put £200 in that line on its own and nothing else. And that's absolutely fine. So your budget can either have exactly the same amount each month, or it can just have the months that you know you're going to make a spend in it, or it can go up and down. So my next line, I'm just going to fill in a few bits and pieces from here. I'm going to say we'll spend £35 a month on software. Telephone costs, let's say it's 55. And on advertising and marketing, let's say we're going to spend £100 a month on Google AdWords, and we'll just push that straight across. You can see what's happening in column P is that your year-end totals are automatically calculating. What I've done here with your overheads is I've used the most commonly used overhead cost. An overhead is a cost that doesn't tend to move directly in line with how much you sell. It's much more likely to move in steps. So it's the fixed costs in the business. And these are the things that we need to know we can cover with our turnover so that we can stay profitable. And when we're talking about what our break-even point is, what we mean is how much do I need to sell to cover my overheads? So I've just put in a few common ones here. So we've got insurance. Let's say we only pay insurance once, and we do that in September, and it's a £200 bill that goes out. But then we've got an accountancy and bookkeeping service, and that's £250 a month. So we'll pop those across. You might have some legal fees involved, maybe just in the setup of your business. So let's say you did a bit of trademarking work, or you'd be lucky if it was £400, but it's not something that's going to turn up over and over again. People costs. So in this particular business, we've got one person employed at the beginning. And actually, if you had somebody on £1,000 a month and you're a small business, you wouldn't pay any national insurance contributions as an employer because it comes under the employment allowance. So we're just going to pop that in until we get to March. And then in March, we're going to employ a second person, at which case we may start to have to pay some national insurance contributions. And for those of you who are employing people, you might know that auto-enrolment pensions means that you do have to make some pension contributions for your people, but you can just pop those in. And there may be other costs involved with the sort of people that you do choose to employ. They might need to have a van supplied to them, for example. So those costs we will put in here as well. Then I've given you some space for premises. Lots of you are probably running your businesses from home, so you don't have any rent to pay. So let's say this business starts off with a work from home situation, and then it moves into some offices, and it's planned to do that in March next year, and our rent's £1,000 a month. And on top of that, then we've got some rates to pay, some business rates, some electric, and let's say we've also got a cost for some water and a cost for cleaning the offices. So as you can see, what we can also do is model in a gap where we don't have any costs, and then say, right, I'm going to plan to do this move in March, so let's put those costs into our budget just for some of the months. And that's what we've done with premises. There are a few other bits and pieces that you might have. So let's say you've got some travel costs going to and from clients. So we'll just put in £50 a month in there. And then subscriptions, you might maybe be a member of a professional body and you need to pay a monthly subscription for that. And that would just pop in here. Has anyone got any, let me just pull up the chat here. Has anyone got any questions or any comments about what goes into overheads? Anything that you think might be missing from that list? No? Okay, that's great. So if I just come a little bit further down, in that, well, we've done it in about 15 minutes, we've filled in enough data to create a perfectly acceptable budget that you could then work from. So this total overheads here is just working a sum of everything that is your fixed cost in the business. So what we're saying is that in June, you're going to spend out £1,525 on just the running of the business. And as we've modelled it, if we do get 1 bigger and 5 brighters and 3 boulders sold, we'll have a gross profit of £3,350. The overheads will come out of that, and that will leave us with a net profit, so after our costs, of £1,825. And that net profit margin that I'm showing just below, that is showing you what that net profit is as a percentage of the total turnover for the month. A rule of thumb that I often use in service businesses, and it's very broad, but it does work, is 30, 30, 30. So you say, I should be spending 30% of my costs on staff, 30% on overheads, and 30% come to me as the business owner as profit. And that rule just keeps you in line to keep a little bit of a check on your overheads to make sure that they're not running ahead and that you're spending enough on people. It tends to work in businesses with turnovers over about £150,000, because smaller than that, you don't tend to have so many staff costs involved. But as your business grows, that tends to work really nicely. In fact, in this business, the way we've modelled it out, we've got a net profit margin of 50%, which means that there's a really good chunk of profit in the business as we've modelled it. What you'll see is I've added a couple of little extras. Some people don't put these into their budgets, but I think it's a useful thing to have down here, is on that basis, how much corporation tax would I pay? This is assuming that your business is a limited company. It's paying tax at 19%. If you're a sole trader, that calculation is slightly different. And then this figure down at the bottom, which is the really important bit. After I've paid the tax, how much money is there available for me? And in this business, as it's been modelled, we've got about 70 grand that's available. So that really fast budget has given us something to then report against, which would mean that when we get our actual figures in for June, we can pop in either another column in here, or we'd pull this data and put it into some software and then say, okay, in reality in June, I actually sold 2 biggers, but only 3 brighters and 7 boulders. What's that meant for my business, and how can I then see how I'm doing against what I budgeted? Few things you can do once you start getting into your actuals. Some people have one budget that they stick to for the whole year. Other people have keep this budget as it is and then have version 2, version 3, and update it as the year goes on. And I think if you're in a startup business, that's probably really sensible to do an update about 6 months in, because things change really quickly. It's really easy to make an assumption that you're going to be able to sell 5 of these things every month, and then turn out that actually maybe the production facilities are behind and you can't sell them because you can't get hold of them. So then you need to shift your whole model, and it can feel a bit tough to be held accountable against a budget that you wrote before you started trading without some of this knowledge. So what I tend to suggest is you hold a version of your original budget always, don't get rid of that, but then create a version 2 that is aware of those changes that are going to happen, and then you can hold yourself against those updated bits of information. A quick tool that I wanted to share with you is it's a bit of an accountant's favourite, and we don't tend to tell people about it because it makes us look clever, but I'm going to share it with you today. So what I've done here is I've filled in some annual figures because it's a slightly easier way of showing you how this tool works. So I've just taken some data across and hard-coded it so that I'm saying I'm going to actually make £135,000 of income in a year, and that's based on the same percentages that we've used over here for our cost of sales. And then I've put some figures in for our overheads as well. And what I want to show you is that there's a tool in Excel under what if analysis. So if you look across the top, I'm in the data section of my Excel sheet, and here's what if analysis. And there's this tool in here called Goal Seek, which is kind of hidden away and you wouldn't necessarily know what it does. But if you hit this Goal Seek tool, you can say, I would like to work out how I make my profit after tax hit what my goal is. And let's say we'd set a yearly goal that we're going to make £100,000 after tax. So what we can do is say, I want to make this profit after tax figure 100,000 by changing a certain cell. And we're going to say, I'm going to change how much income I get from my figures. And if I do that, Excel will automatically work through all of the scenario that you've built into your sheet and change what that figure needs to be, taking into account that your cost of sales are also worked out on that figure, and come down to the bottom and give you 100,000. And that Goal Seek is really fun because you can then say, okay, so fine, if I want to make £100,000, I need to sell £95,000 of these biggers. But how about if I wanted to make £1 million this year? How many of these biggers do I need to sell? And it's coming out at 1.3 million of them. But it gives you an idea of where you would need to go to get to this bottom figure. And you can do that on any basis. So you could then say, okay, if I want to make a certain gross profit, how much do I need to change up here? If I want to hit a certain net profit margin, what do I need to do at the top to get that to work through? So that Goal Seek, just show you again, what if analysis and Goal Seek is a really useful tool when you're doing budgeting or forecasting, when you know where you want to get to, but you're not quite sure which numbers you're going to need to change to get there. That will do it for you automatically. Just a quick explanation as to why we took them out. to this side. It doesn't work if you've got a formula in that box. It only works on hard-coded numbers, so you're going to need to have actual numbers in the boxes to make the goal sheet work. Did that make sense? Will you just give me a quick shout, so yes, if you understood what that was about, and if you say no, I can send you a further explanation. Excellent, thanks Teresa. Good stuff, Daniel. Wonderful, okay. Perfect. Okay, so we have got 15 minutes left. I want to very quickly show you where we go next. So budgeting in a spreadsheet is, as you can see, something you can really do in 15 minutes if you've got some ideas in your head as to where to go. Even if you don't feel you've got all the data you need, get started, throw some numbers in it. It doesn't matter if they're wrong. As long as they're a good guess, you can come back to your budget and say, okay, now I know that my phone contract is actually £75 a month, so I can change that. Now I know that actually this product sells at a higher price point, then you can change it in. But just get started on something. Once we've done these budgets, we can take them back into Xero. So what I'm going to do is just quickly switch this share over to another screen. Okay, so I'm hoping you can now all see my Xero screen, which is a blue screen with a profit and loss on it. Can you guys see that? Great, okie dokie. So if any of you are using Xero, you may not be aware of the budget manager. So what you can see here is a Xero company that I've set up. It's just a demo company called the Bigger, Brighter, Bolder Products Company. And under reports, there is hidden away, because it's quite an odd place to put the budget manager, but there it is. It's just tucked in here. Give me 2 seconds. Xero is quite good on logging you out after a few minutes so that other people can't get hold of your data. And if you are using Xero, you should be using the 2-step authentication to make sure that nobody can get hold of the information you've got in there. So this budget manager is a place that you can enter your budget data, and in Xero you can ask to start it anywhere that you want. So I've started this one in June, and then I've added some data into here. It's really super fast and easy to use. So say I've got £100 of direct wages, you can put the data in and just say I'd like to push that across for every month going forward, just like we did in the Excel sheet. And there it is, it all fills out for you. And then you hit save, and you can work on that as you go through. Alternatively, you can create a budget in Excel, and then you can see here you've got an import and an export button. So you could just import your data back in. And the lovely thing about having that is if you are using a product like Xero, you can just run your profit and loss account against your budget. And what it'll do is show you, let's just change it for a month that we've got some data for. So it'll show you what your actuals are, what your budget is if you've got one in there, and then what the variances are, so that you can have a look and see how you're doing year on year. And the last bit I just want to show you as to what happens with forecasting is you can then pull that kind of data out into some forecasting tools like Spotlight, which is the one that we use here, and that will create you something like this. Let me just make sure that we're sharing. Will you just give me a shout that you can see the BBB product company demo? Fab. Great. So Spotlight will pull the information that you've got in Xero for your actuals and for your budget, and it will create reports like this. So for example, here we've got our sales, and then what we've got is our budgeted in the blue, and it'll give us a year to date. And this one is at quite a nice high level, so gross profit margins, OPEX, operating expenses. You'll see that used quite often in accountancy language. We're really poor at making ourselves clear, I think, as accountants. So you'll see lots of these kind of terminologies, and I try as much as I can to explain them. So net profit before tax, and then it pulls it out into some nice pictures, which I find much easier to read than big charts of numbers. So we can then see what's going on with our revenue, what are we budgeting is going to happen with our operating expenditure, and so on. This is a classic three-way forecast. So you'll see, if I go back to the beginning, we've got a profit and loss budget, and we've got a balance sheet budget. So that's going to show us what's going to happen on our balance sheet and where we're going to end up at the end of the year. And then we've got a cash forecast, and this is the classic, the classic explanation of a forecast. It says, how much are we going to get in? So this is not the same as how much are we going to bill people, but how much cash is going to come in from sales, how much is going to flow out when we pay our bills, and that gives us a net cash flow and a closing bank balance, and that closing bank balance goes back up into the beginning. We work it through for the next month. You can see there's your opening balance, net cash flows out, and a closing balance. And the reason we run something like this sort of cash forecast is to say, right, what's going to happen? Have we got a gap somewhere that we need to go out and find some funding to fill? Or alternatively, are we going to end up with a lot of cash surplus that we should be investing, or it should be working a little bit harder for us? So that's what our cash forecast would look like. And a tool like Spotlight works in the background with ideas like, how long is it going to take my customers to pay me? What payment terms am I going to use for paying my suppliers? When do I expect to pay out tax or VAT? So these quite complex calculations. We could do it in a spreadsheet. It would probably be a day's work to get that to happen. If we're using something like Spotlight, we can pull it directly from Xero, spend a bit of time on the setup, and then really at the touch of a button, we can start to generate these forecasts. And then from there, we can say, right, what happens if I add in a bigger office, 3 new members of staff? What happens if I stop selling this product and start selling another one? And we can make those scenarios within something like Spotlight, and it will create us this three-way forecast to show us what would happen and where there are potential pitfalls or real gains. And there's a nice picture of what that forecast looks like. So money coming in and out, for example, so cash in and cash out, and where we can expect our cash balances to be. So that's one of the real bonuses of doing this work. To start with, if you write your budget and you upload it into something like Xero, then you can start to create these sorts of packs of information to really help you to drive your business forward. So let's just stop that share. I'm just going to come back over onto our slides so we can finish up. So we've gone through all of these different options in the Excel sheet and using the goal seek tool was the last bit. So what do I do with it next? Well, I create a cash flow forecast. I can put the data back into my accounting software. I want to report against my budget monthly so I can see how I'm doing. You can use your budget to drive your KPIs. So if you know what it is you're trying to achieve with your budget, you can then say, right, let's set some monthly key performance indicators, KPIs. So I can set my monthly indicators based on what I want to do in my budget. So if I know it's really important that I sell 7 of that particular product next month, I can set my KPI around how many customers do I need to reach out to in order to convert them in order to sell 7. So it may be that I know I've got a conversion rate of 50%, so I've got to have touched 14 customers in order for me to make those 7 sales. And so you can use your budget to start to drive your activities within your business. You can play with it. The whole point of writing these things is that they're not held in concrete. They are working documents. So don't be scared of putting things down into a spreadsheet. You can throw anything you want at it, make it your first try, muck about and see what would I need to do to get this to £1 million. How crazy would it be if I bought a new factory to make these things? Play around with your budgets and use those what if scenarios as much as you can to just try and model out lots of different options. When we do that exercise in success groups where we say let's think really big, let's go as big as we can, these kind of spreadsheets are great for doing that. I know they look like they're kind of boring and accountancy type of things, but actually they're really creative. So you can go in and start fiddling around with what would happen if I went global and I suddenly got 1 million customers. How would that affect my cash flow? What would I need to do? Would I actually need to borrow money if I got that big in order to fill the gap for manufacturing before I was ready to carry on? So that's why we're going to do these things, and that's the sort of fun stuff that you can do with your budget. So thank you for listening. I know I feel like I've just been talking into the ether for the last 55 minutes. So hopefully you've got what you need from us. Do you want to just let me know if anybody's got any questions from any of those things that we talked about, and just pop them into the chat panel for me? Do people feel like they are less financially terrified than when we started? Fantastic, that's what I wanted to hear. Good, I'm really glad. It's something that I'd love for you to be able to, oh, that's fine, Vicky, thanks very much. It's something I'd love for you to be able to take away and really get started on, even this afternoon, if you just try plugging some numbers into that spreadsheet, see what comes out of it. So I'll send that out to you by email. So everybody that's been on the webinar, you can have an email copy of that template to muck about with. Have a go at seeing if you can just set yourself a timer, see if you can do it in 45 minutes. I guarantee it's possible. You've seen me do it in 15. I'm sure you guys can do it in 45 minutes. And then if you want to go through what it is that you've created, give me a call or drop me an email, send me something in the chat, and we'll do a 45-minute review, either face-to-face or over Zoom if that works for you. Absolutely free, just to help you get that budget into your financial planning, and we can see where we go from there. Last bit. If you want to get in contact with me, my name's Tori Wagg. If you didn't catch it at the beginning, you can email us on support@, you can give us a call, or come along to one of our Xero events. If Xero is something that you're thinking about or you'd like a bit more information about, we run 2 events a month. One of them is a Xero workshop for beginners, so an introduction to Xero, and one of them is for people that have been using Xero for a little bit, and it takes you a bit more into reporting, using that budget manager, some of the less day-to-day stuff, and you guys can book onto that directly off our website, which is at pantheraaccounting.co.uk. I have left you with 2 minutes. I'm just going to have a quick look through those chats. Teresa, that's absolutely fine. Let's have a catch up. Paul, lovely, thank you. I'm glad that it was useful for you. Thank you, Louise. I'm glad that it was accessible. I know sometimes accounting stuff is a bit scary, so I hope I've taken some of the fear factor out for you. Thanks, Rose. That's great to hear. And I will, as long as everybody's happy for me just to email that document over to you, it's there for you to play with. Give me a shout. I'd love to hear how you're doing. So if you've got another accountant, if you're working with somebody else, that's absolutely fine. If you just want to give me a bit of feedback and say this bit of the budget works for me, or how do I go about using it in a different way, I would love to hear from you. Thank you so much, guys. I think we're probably done. We seem to have managed to fit ourselves in with a minute to spare. Drop me a note if you need anything else. Otherwise, thank you so much for joining us.